today's show, we ask what makes a successful contrarian investor.
How to get your ISA investments in order as the tax year end approaches, with special guest Holly Mackay of Boring Money. And Generation X, how is the squeezed middle coping in the run-up to their retirement?
Hello and welcome to Markets and Insights TV with me, Micah Curry, and Tom Stevenson. To stand out as an investor, you need to do something different from the crowd. This is called contrarian investing. But who are today's contrarian investors and what makes them tick? Tom went to find out.
Contrarian investing is about doing things differently from everyone else. If everyone's heading into town, a contrarian goes the other way. They prefer to swim against the tide. Some of the most successful investors are contrarians at heart. I went to speak to three of them.
First, I called on former Fidelity legend Anthony Bolton.
What contrarian means to me is doing something different from what the majority of investors are doing and being somebody who's not tied up, who's not influenced by crowd behavior. I think the natural thing for most of us is to be influenced by the crowd. But as a contrarian, you really have to stand back from that. And one of the things I observed when I first looked at charts of the stock market, and I think most people, when they look at a chart of the stock market and see the gyrations, they think it's going to be very easy. Oh, I just invest when it's low and I sell when it's high. But what you find when you live through it, all the background noise and behavior is really pulling you towards doing the opposite of what you should be doing. So actually when markets are high, that's when everyone is very optimistic, the outlook looks very good, and you're being sort of sucked into that crowd of goodwill and everyone feeling happy with life. And it's completely the opposite. When markets are low, many investors sadly get shaken out in those bad times when they should be just doing the opposite. I think if there'll be some people who, if they're honest about it, they'll have to say, well, actually, I'm probably not going to be a good investor from this aspect of investing because when everyone around me is scared and the bad things are happening in the financial world, I'm likely to lose my nerve. But if you discipline yourself, then I think you can learn some of these attributes.
Back in the city, I picked up with Investec's Alistair Mundy. He's made a career out of buying what others don't want.
To me, contrarian means being willing to look at opposite views, being willing to say the consensus isn't always right. I don't know if in real life swimming against the tide makes such great sense, but for investors, it's a good thing because markets go off on trends. They go up for a long time, they focus on specific bits of news, and then they sometimes go down for a long time, focusing on other pieces of news. And I think that's why it's so important when you do look to recruit other contrarian investors, don't necessarily go for intelligence, go for a state of mind, because it's very, very lonely being on your own and being wrong. My feeling is it's in your DNA. You either have got an interest in buying stocks that go up, or you're intrigued about stocks that go down, and you're attracted to the bad news because there's always the potential for that bad news to turn to good news. So I think you've really got to ask yourself, am I happy being alone and being wrong? And if you're not, then don't even bother starting to be a contrarian investor.
Alex Wright is another Fidelity fund manager whose starting point is what's out of favour with other investors.
If you invest in something which is doing well that other investors perceive positively, if those things continue, then you're unlikely to make much money. In contrast, if things go badly in a stock that's well liked and well owned, you can potentially lose a lot of money. If you then look at something that other people don't like, and there's a continuation of negative trends, you probably don't lose that much money. But if things do change, you can potentially make an awful lot of upside in those types of stocks. The key, I think, with being a successful contrarian value investor is actually to work out sort of which stocks are the value opportunities rather than the value traps. So I tend to spend a lot of time scouring the market, looking at stocks which have underperformed and been doing badly, sort of sifting through the metaphorical reject bin, as it were, and it's therefore the stocks where we've done the differentiated work and we can see the potential for change that I then buy into. I do think it takes a certain personality type to be happy to be a contrarian. And so I do think it's not possible to just learn to be a contrarian investor over time. You have to have the personality type that is happy being different, that is happy having a differentiated opinion.
So there we have it, 3 takes on a common theme. Contrarian investors, it seems, are born, not made.
Part of being a successful investor is making the most of your annual ISA allowance. But for many investors, it can be quite daunting to decide which funds you want to hold within that tax-efficient wrapper. Now, I've asked Tom to share his investment ideas with us. The important thing to remember is that these are Tom's personal choices and should not be taken as investment advice. Tom, over to you.
Thanks, Micah. So I'm splitting my ISA this year 4 ways. I think the general outlook for equities is pretty positive, so I've chosen a global equity fund. It's the Rathbone Global Opportunities Fund. The other region that I like at the moment is Japan, where I think shares look reasonably cheap and the outlook for earnings is positive. The one I've chosen there is the Schroeder Tokyo Fund. This year I also expect interest rates to stay low all around the world, so I'm looking for sources of income. Commercial property is a great source of reliable and sustainable income, and I'm going for the SLI Ignis UK Property Feeder Fund. The other source of income at the moment is equity income funds, and I like Michael Clark's Fidelity Money Builder Dividend Fund. So that's my ISA. Once that's out of the way, I need to start thinking about the junior ISA for the kids. Now, Micah went to speak to Holly Mackay of Boring Money in our brand new investor centre to talk to her to find out more about what tired parents should be thinking about when it comes to investing for their children.
Holly, you're a busy mum of 2, but you still make time to prioritise your children's junior ISAs. Tell me why.
Well, I think of a junior ISA effectively, it's just a tax-free savings account for the children. So I think it's a good way to set some money aside for when they're older. They get access to that money when they're 18. And all I can do is hope that they're sensible enough to do the right thing with it. That's something that does put some people off junior ISAs, although evidence suggests most kids, when they learn about this money, see the chance to take it and to do something sort of more positive and constructive with it.
Now, of course, parents have a choice between a stocks and shares ISA or a cash ISA. Which one do you choose?
Well, given the timeframes, I mean, my oldest kid is 7 at the moment, so we're looking at least an 11-year timeframe. So personally, I go for shares. Research tells us that if you're investing for at least a 10-year period, shares are 90% more likely to do better than cash. So for me, when I look at lots of people who, you know, we don't like taking risk with our children, so lots of people do tend to stick in cash, but actually I think if you're looking at about a 10-year time frame, you've got to take a deep breath and at least consider the option of stocks and shares.
You really are the exception to the rule, because the numbers show that a lot of parents still prefer the more risk-averse option, which is a cash ISA.
I think it's when there's something about having children that brings out this sort of fear of taking risk. I remember driving home with my firstborn in the car seat and driving at 20 miles an hour and freaking out. So I think that risk and the fear of risk, we carry that over to when we're considering investments. But actually you've got to sort of ask yourself if you're being what some experts say is being recklessly cautious. You're sort of hugging the safety of cash, but by doing so, you're probably giving up the bigger returns that you could be in line for.
Now, what a lot of parents find quite daunting is deciding on the funds to hold within this tax-efficient wrapper. Which funds do you look at, broadly speaking?
It is a tough thing, given the time frames that I've talked about. I actually think if you're investing, my youngest is 5, you can be a bit spicy when you're investing for a 13-year time frame. So I've gone for some emerging market funds. I've looked at the growing markets in India. I've looked at the growing markets in China. I've also invested in some smaller companies in the UK that I hope and believe will grow and sort of develop over the next 10 years. So I think lots of people tell me they do find it daunting, but what I would say is you can go online now and there is a lot more help and guidance in actually picking the right funds for you than there has ever been before.
Holly, thanks so much for those insights into junior ISAs and how you invest for your 2 children.
That's my pleasure.
Of course, as the tax year end approaches, it's really important to think about your pension.
Our next feature looks at Generation X and how the squeezed generation thinks about retirement.
Generation X came after the baby boomers and before the millennials. This generation has had its fair share of economic challenges, from recession to technology boom and bust and the global financial crisis. Many Generation Xers form part of the so-called sandwich generation, a demographic group torn between the twin pressures of caring for elderly parents and adult children.
We're finding we are becoming parents of our parents while still being parents of our children at school, whilst almost being in between parents for our eldest who's left university. So she's come back to live at home with us, and you know, we are squeezed on all fronts, aren't we? Because we're
all things to all people,
parenting
all the time.
Yeah. We're not the only ones in that boat by
Yeah.
any means. I mean, it's interesting that
And
sometimes...
well, I would say it always comes up as a topic of conversation. Somebody will have the next chapter in their story to relate. But I do notice that the emphasis is a lot more now on the extra duties that are being taken on by our generation that none of us had anticipated.
That's the thing.
And actually, we're all a bit grumpy about it, if I was to be honest.
Generation Xers grew up in an era of emerging technology and global political events. From the Vietnam War to the fall of the Berlin Wall and the end of the Cold War. Generation X's attitudes on political and social issues often fit between those of the more conservative baby boomers and the more liberal millennials. Bookended by these two larger generations, it's often described as the neglected middle child, an overlooked generation squeezed out of the frame.
It's fair to say that our world bears no resemblance, I think, to the world of my parents.
You feel a bit like you're a bit of a pioneer because you're just ploughing on thinking, well, I don't really quite know what I'm doing, but I'm aware that it's new and a little bit scary. And I'm quite annoyed that there's not enough acknowledgement of this situation, you know, universally around. People aren't talking about this more. We're hearing a lot about the ageing of our population. We're hearing a lot about boomerang generation all coming back to live with their parents. You know, what about us?
Yeah.
What about us? We are those people who are managing all that.
This is a squeezed generation, time poor and pressurised. The cost of long-term care, large mortgages, university fees and job security are just some of the worries faced by this generation.
There's never any spare cash, so it's all committed. There's just not enough to go around. So therefore, to us, the concern, if you like, is those kind of surprise events, like a sudden
the car breaking down, a leaky window,
a school trip that's suddenly we've got to pay for.
Pops up from nowhere.
That's a concern.
It is a constant balancing act, and you don't want to drop one of those balls and suddenly find yourself in a pickle.
And you do have to make choices, because we are dealing with everything day to day.
But it's
we make choices.
I do it quite well, but I'm very fed up of doing it.
Yeah.
If I was to be honest.
Actually, yeah.
I'd like to not have to worry about that kind of aspect of our lives.
Yeah.
And also we do rely on the fact that we need to sell our house to realise enough cash to live on.
Now you're going to keep me awake at night. Yeah, the house has become our future in that respect. If we, our financial security is entirely wrapped up in, 1920s bricks and mortar. So, if we wanted to have
if we're going to have a real panic, then that would keep me awake at night. About
crash.
Missing the boat. It's about missing the boat to cash in on that. A fantastic benefit that we're living in.
While they should be thinking about retirement, many argue that they just don't have time.
It's not a subject that I would sort of rush to, because retirement seems like a kind of distant nirvana of, probably something that I might never reach, So I don't think about it probably as much as I should.
I'm enjoying the vision enormously. The whole prospect I find quite exciting. I'm not frightened by retirement or daunted by it. No, I'm looking forward to it. Holidays, high-end sort of skiing, luxury holidays, I'm not interested in that, no.
I am.
Yes, well you want a boat, but
Yeah.
if we have a boat we can't have a house.
No.
And I'm not living on a boat.
Got to
That's
prioritise. Yeah.
Absolutely. Okay.
Understood.
But you know, UK holidays, marching around, fresh air, maybe a dog, quite like a dog.
Yeah.
Is that
We have a vision
is
of
that a
comfortable
luxury
retirement.
item? I don't know.
I think it's fair to say, we are thinking about how we make that vision happen. And it's,
No, we
you know,
are.
There's no definite, clear route to that.
You can't really blame Generation X for not having retirement front of mind. With many facing the challenge of caring for themselves and the generations above and below them. But the wheel keeps turning, and very soon, this generation must stop thinking about everyone else's future and prepare for their own.
Unfortunately, we've come to the end of this edition of Markets and Insights TV. If you'd like to watch our clips again or watch previous editions of our program, visit the Fidelity YouTube channel. Also keep an eye out for Markets and Insights Extra, which will feature the full interviews with Alistair, Mundy, Alex Wright, and of course, Anthony Bolton.
And for more information on funds and retirement, visit the Fidelity Personal Investing website. Goodbye from both of us, and thank you for watching.